Hello. Welcome to the weekend video. This is Enda here, and as usual, I'm going to dive into the markets and see what's happened this week from an Elliott wave perspective or a technical perspective, whichever way you want to name it, whatever your perspective is. Okay, so I'll start with the FX and then dive into the others. Okay, it's been an interesting week. I thought we would get wave B wrapped up early this week and then begin to move down into wave C in terms of the stock market, but that hasn't happened, and it was brought to my attention there yesterday or last night that expiry was today. Oh well, halting of options was today. So yeah, I'm thinking that probably has a lot to do with it. That the spike overnight or the after hours trading last night had something to do with this options expiry week coming up. Get if you were long, off the lows, which I suppose a lot of the trade had been just momentum following the trade up. You don't want a rollover at the end of expiry, do you? So you buy in. So that could be a lot of what's going on right now. I don't think it's not going to hold. There's no way that's going to hold because once this particular trade is done, so it's they're off and on to the next trade. So I think the next trade is down. Wave C hasn't started yet, but Wave C will be coming. It's coming our way. Okay, get into the FX first. Here is euro dollar, that big wave 2 high back on the 3rd of March. Sorry, 10th of March. We've declined rather impulsively off that high. I think that's a wave 1 of a third wave. What's happening in wave 2 is interesting because there's a couple of let's say iterations of the same corrective wave 2 that we could go with, and I'm going to dive into those right now. Obviously, this first leg up is an A wave. So what's going on right now should prove either to be the beginning of wave C, while the decline could be the end of wave B. And what's going on right now is the interpretation I'm using right now is that this is the beginning of wave C. So wave 3 C of 2 should push up above 111.50 to complete it. But there is another way you could look at this wave B, which would allow another drop down into like a double bottom. Let's say if we were to trace out a straightforward flat, I think would probably fall one more time in wave C of B, let's say, and then rally in a larger wave C to complete wave 2, and that would end up somewhere around that 111.50 target anyway. So I suppose it's a flip of the coin right now, seeing where this goes. We have a low here, a solid low at, well, let's get into the short term. Let's get the hourly chart and we'll see that what I'm calling wave B at the moment could be it's 107.69 called. So if you get a break in 107.69, well, then that might trigger that alternate wave B scenario. So I've got a couple of alternates running in the background here. It's kind of like another program running in the background. This could also be a wave 1-2 scenario to begin wave 3. So 1, 2, and then we fall down into wave 3. I think that's kind of declining right now in probability. Like the main wave count still stands. A slight new low early this morning, but we're trading higher again. So I'm still pinned. My flag's still kind of flying towards that wave C rally, which should push up above 111.50 at a minimum, and then we fall into wave 3. But there are, there's a few scenarios that are playing in the background that are kind of they're niggling at me at the moment. So I haven't clarified which way this is gonna fall just yet. If we get a break above that, like we have that interim B wave high, let's say at 109.90 or 109.91. if we break that in a nice, if this spike higher continues and we break that in a nice impulsive move, well then wave 3 is the main contender. If we fall again in a corrective fashion to form a double bottom, let's say around the 106.30 level, then this larger wave B, where I'll show you here, this larger wave B will then take precedence. And if we fall down, if we continue to gain momentum to the downside, well, then this alternate count for 1-2-1-2 pattern will gain will gain precedence. So we're flying between flagpoles here at the moment. Well, I suppose that quintessentially dictates that this is a correction. It's if there are numerous avenues, well then that is the definition of a correction. Okay, so next week, yeah, I'd like to get some clarity between these kind of floating alternates right now. I'm willing to consider this. Well, if we go into the 4-hour chart there, I'm willing to consider this 3-wave decline as an internal wave B before rallying in wave C, but we'll see how that goes. But I would prefer if we just rallied straight away in a third wave to complete 5 waves up in wave C, but I'll just have to wait and see how that goes. Too many C's there. Okay, move on. Let's get to cable. We're still working on this 5-wave pattern to the downside. This retracement in wave 4 was pretty hefty, which is interesting in a way, because on the daily count here, I've got a pretty viable alternate account right now, which spans, for the last 4 years. So hence the reason, I suppose, why things are taking so long to kind of play out. It's a long 4 or 5 year pattern. That's just the way things go. In terms of the current decline of this wave 4 high, and we're looking at the 2017 high, the April 2017 high. Right now, I'm counting this as an ongoing wave 5 to the downside. So it's wave 1, A, B, C, wave 2, beginning of wave 3. So wave 3 should continue to cascade lower, then wave 4, and then wave 5 of 5. Now, the alternate count, that rally up into the April high of 17, that could be wave A. This could be wave B, and then we could be beginning a rally in wave C. So yeah, it's this. If that alternate count is correct, then there is a lot of upside. Something like 2,000 points upside at this point. So I would like to clarify. I'd like to be able to clarify between those two counts right now, because there's also a lot of downside if the current wave count is correct. So let's see how that plays out. We should know. We should know by the end of next month how this is going to go, because if this is a wave 1 and 2, well then wave 2 should finish a correction next month, and then we should rally hard again in a third wave. Let's get into the 4-hour chart. You can see, well, I'm going to continue with this, 4th wave correction higher, possible move down into a 5th wave of wave 3. Excuse me, I'm yawning here. Been up too long. Okay. There's nothing more I can say about that 4-hour chart. Let's get into the hourly chart. So you can see we've got an A, B, C pattern, wave 4. We've got hit weakness this week, which is good in terms of the main wave count. I'm not sure whether this wave 2 is done just yet. This does not look impulsive to the downside just yet. So we may have a double top here around the 125.70 region. It must complete below 126.48. So unless we get, a wicked acceleration lower either later today on Friday or on Monday to kind of reaffirm 5 waves down already underway, or wave 3, sorry, of 1 already underway, then we're going to have to look at an alternate wave 2 lower high before we spill down into a third of 1. Okay, so again, want to see this minor correction complete to complete this larger correction in wave 4 and then move down into a larger impulsive pattern. Let's get into dollar yen. Dollar yen is again kind of between two stools as well. We've traded down, but we're still kind of leaning to the downside. I did move up the wave count degree by 1 degree. Was that earlier this week or last week? I can't remember. But the working thesis is now that we have wave A, a 3-wave correction, wave B underway, before falling into a C wave to complete wave E, to complete wave B. So it's there's a lot of kind of dominoes falling right now. Okay, so if this is a 3-wave move down, move down, and we are in an internal correction, this will be a B wave correction. So let's get into the hourly chart. That's the 3-wave move that I'm looking at right now. We had earlier this week we had a nice initial spike higher. That could be wave 1, and maybe we're still working on wave 2 here. So in the short term, I'd like to see price hold above 106.91, let's call it, and then move higher in a third wave of 4. So wave 1, 2, 3, 4, 5 should complete wave B. We should hit a target at 109.38. Let's call it 109.40 before we're heading down into wave C. Now, is it possible that wave C is already underway? Yes, it is. This large wave C is may be underway. I just don't like the idea that momentum slowed so much internally here. It did support another look at the internal wave B here. You can see that you would expect an acceleration lower, and we didn't get that. We got this kind of real bitty move to the downside. I know we fell 150, 60 points in that move, but yeah, not convinced by it. So if we do see a 5-wave move in wave C of B next week, then after that, that would complete a nice clear 3-wave pattern here, and after that, we'd expect another decline into wave C to complete that triangle wave E. Okay, move on to what everyone's looking for. Here's my take right now, honest take. I still think we're topping. We're topping in a B wave, and I think the next move is in a large C wave down, and that will complete a wave A. So you can see here, wave A down took 3 waves, wave B, ABC is looking at 3 waves, and then we should head lower again in 5 waves to complete the larger wave A. So that's 3 waves down in wave A. We have a target in around, well, it's anywhere from 14,000 down to about 10,000, depending on how the fib levels come in, depending on the relationship between wave C here and wave A. A simple wave C equaling wave A will bring us to somewhere around 13,200, so 13,000. And I think that's very much on the cards over the next month or a couple of months, because it should take a couple of months to trace that out, probably into the summer months. Maybe we bottom towards the end of the summer. Let's see what sort of date we're getting on that. May, no. Yeah, middle of summer maybe we continue lower. Wave C should wipe the smile off everyone's face. I mean, we've had this rip-roaring bear market rally right now. And of course, everybody's already looking at new highs. I just can't see it, to be honest. This is a clear 3-wave pattern. I mean, how you break out wave C here internally is kind of up to yourself. It could be an ending diagonal, and that's what I'm going to show you right now. But we've already got, here's a 4-hour chart. We've already got serious divergence on the 4-hour chart. We've got a real slowdown momentum in this C wave here compared to the wave A. Everything technically is pointing lower. The internals of this rally are pretty horrendous as well. there was just such a heavy short position at the lows that this is just a pretty, bog standard clearing rally at the end of, a clearing rally to kind of squeeze out those shorts, and then we'll head back down again into wave C. When does that stop? When does that start? That's the question. Down at the low here, back at the end of March, when we were looking for a major rally in a B wave or a fourth wave, depending on which way we looked at that point, we were looking for a major rally in or a major bear market rally. Nobody was looking up. There was not a single pundit on mainstream TV that was looking higher on the 23rd of March. All we could see was further downside, and those calls for like 10,000 Dow on the 23rd of March. Like, this is less than 3 weeks ago, or well, maybe 4 weeks ago, a month ago. And now we're at the top of a 3-wave corrective rally, and of course everybody's now pointing towards 30,000. No, I don't think so. The market doesn't work that way. It's the market's job at every major turning point. It's the market's job to fool as many people as it can, and it's doing that right now in spades. So let's get into the C wave here and see if we can tell whether the larger C wave is going to begin, when it's going to begin. I'll stop my rant. I'll just move on to the technicalities of it here. Okay, today I'm showing some sort of either developing ending diagonal or complete ending diagonal, depending on how you look at it. We had this spike high after hours yesterday, and we seem in the early trade, well, so far morning trade over in the US, we're selling again. So it's not particularly, let's say, it's not particularly favorable towards that spike higher that happened overnight. My guess is, again, that because we're hitting, options rollover week next week, like options stop trading today, my guess is this spike was probably just to hit some targets, and we'll head lower once all that particular trade is kind of played out. We've hit a serious block or a serious slowdown of momentum the second we hit this 50% retracement level. I mean, we've just traded basically sideways for 11 days or almost 2 weeks. Basically, we've got net no new progress since this. Maybe it's the top of the third wave here. Maybe there's some sort of flat fourth wave and spike higher in a fifth wave. You could still read this as a 1, 2, 3, maybe third wave into that, flat correction, fourth wave, rally, spike into a fifth wave, and that definitely fits as well. If I drop those down, these first two, wave 1, 2, a rally in a third wave, flat fourth wave, spike fifth wave. Momentum is pretty much dead right now. Even though we had a spike higher, the major momentum is not to the upside. It's flat and to the downside. You can see on the 4-hour chart here that we've already built a pretty significant lower high, and we're heading lower again. So the question on everybody's mind is, are we just going to continue this rally forever and a day? I do not think so, obviously, but I've kind of stuck my flag in the ground and I ain't budging. And like I said, at the lows, nobody saw a rally coming except us wavers. And at these highs, nobody sees a decline coming except us wavers. So, do we push higher again? Maybe we hit the 62% retracement level. I'm not convinced that we get there. I'm really not convinced, especially if we sell down in towards the end this evening's or today's session. If Friday sells after a spike on Thursday overnight, I think it's cooked. I think it's done. And next week we'll be looking for this bearish impulse wave, and that's been my focus for the last couple of weeks. Obviously, I see this, or for the last week anyway. I see this B wave closing out, and I see a bearish impulse opening up to the downside. I can't see it any other way right now. Tell me if I'm missing something. But I just can't see any other way at the moment. Okay, so next week, my focus is on a bearish impulse wave. I want to build this 5 waves down with a 3-wave recovery to a lower high to kind of point us firmly to the downside to begin wave C. Okay, initial target would be a break of that 23 256 level. So a break below 23 would really do it in wave 1. Okay, that's that. Let's move on to the next domino. Okay, gold. We have a few different. I'm going to start in the daily chart actually. There's a couple of alternates here that I want to talk about. We have, I think we're pretty solid on a wave 1 and 2 into the 17 lows. I then worked on a lower degree wave 1 and 2, and then the rally into the recent highs back beginning of March was wave 3. Now, the immediate alternate account you can see here on the daily chart is that instead of wave 1 being at this early 19 high, that can be counted as wave 1 of 1. So you could go wave 1, 2, 3, 4, 5 up into the February 2020. So that year-long rally in 5 waves could be just wave 1 of a larger wave 3. If it is wave 1 of a larger wave 3, well then we are poised for a long-term bull market in gold. The one caveat is wave 2 complete? We could have an expanded flat wave 2 done, and we're already beginning wave 3, and that's what I'll get into next. So that's the large degree daily alternate account. So we have wave 1 and 2, and wave 1 and 2, and then a rally in wave 3 to come. A rally in wave 3 of 3 to come. Now the main count that you're looking at right here is that wave 3 is already done, and that recent decline was wave 4, and now we're working on wave 5. I would like to see wave 5 push out, towards those all-time highs again. I would like it above 1900. That would kind of push us up to that upper trend line there. And that would complete wave 3, I think. There's a few ways we could look at it, but let's get into the hourly or 4-hour chart here. Now, wave 3 and wave 4 done, and this could be wave 1, and we're starting on wave 2 of 5. Okay, so if wave 1 is done at the recent high, then we're falling in wave 2 right now, and wave 2 would find significant support between 1640 and 1560. So that's, I know it's a wide range, there's 80 points, or $80, sorry, but you have an internal shoulder, left shoulder high, and a neckline low. So that's kind of what you'd be looking at for a second wave retracement, and that's a previous 4th wave, so that would kind of attract that second wave right down into that previous 4th wave. Now I have a shorter term alternate account here which could view wave 1 and 2 at these levels, and if that's the case, well then this is another one too. So there is a possibility that we are only beginning an acceleration phase in a 3rd wave of wave 5. So let's get into the hourly chart here. You can see that alternate count for wave 1 green and wave 2, and this is wave 1 blue and wave 2. I have to say the action over the last couple of days is leaning towards that alternate count. Now it could only be wave A of 2 is already done, but it also could be that it's a wave 1 and 2 already done. Especially if we start moving impulsively out above 1746 again, then we'd probably be within our rights, let's say, to look at the more bullish interpretation for, let's say, wave 3 in green, which I'll put up there. So the next leg up should be a third wave in green. And it should be wave 3 of 5. So it should be a pretty lengthy rally in its own right. But right now, I'm kind of, the daily alternate count is just there in the background. It doesn't really force us to make any changes with the main wave count that I'm working on. So at a minimum, it's a 5th wave rally that we should be looking for to continue. The 5th wave rally either has the most recent high as wave 1. And this would be the most conservative view, let's say. That was wave 1 of 5, and now we're falling in wave 2 of 5, which has support down around 1560. 1640 between 1560. So somewhere around that 1600 level, wave 2, and then we rally in wave 3 of 3. The alternate count on the short-term chart is that we have wave 1 and 2 already done, and now we're already beginning wave 3 up. And this is wave 1 and 2 of 3, and then we should, accelerate higher in a wave 3 of 3 pretty soon. We're down around initial support. We're catching this previous shoulder here. We have 2 internal shoulders, left-hand shoulders here. You can see 1670 and 1640. That 1640 level was the initial, let's say, the initial most likely support for this second wave to complete. We've got an internal 4th wave triangle also there. So, yeah, betwixt and between, I think, in gold right now, and it just has to decide which way, which is the most likely path forward for wave 3 in green, this larger wave 3 in green. We should know that next week should be the arbiter on that one. Okay, so let's move on. Crude oil, I'm going to go to Admiral Markets for crude oil. So, yeah, well, 1 second now, go back here. 4-hour chart. Yeah, so we have a wave 4 complete. I'll actually get to the daily chart. That's probably more fitting. So you can see either this is a B wave high. I'm looking way back here in 2018. The 2018 highs is either a 4th wave high or a B wave high. And this whole decline off that 2018 high is a 5th wave decline. So we have wave 1 of that decline done, wave 2 into the April 19 highs, wave 3 is now underway, and we have wave 1, 2, 3, 4, and 5 in play right now of wave 3. Then we should have a 4th and a 5th wave to complete this larger 5th wave, and that should push crude oil down below the $10 mark. Okay, so let's get into the hourly chart there. Here is the, this wave 3, 4, and 5 scenario. And again, it's because we're working with corrections, it's always interesting to see which way the kind of dice is going to fall on a correction, but it's frustrating as well, obviously. There's a couple of ways you can interpret this 4th wave. It's either done at the recent $29 high, and now we're moving down in wave 5. I'm perfectly happy going with that because that's the main count. So that's obviously I'm perfectly happy going with it. So we have wave 1, kind of flat wave 2 done. 1, 2, 3, 4, 5 now completing in wave 3, and then we'll get some sort of correction higher, probably back up above the $22 level in wave 4, and then we'll fall again down towards 15 in wave 5. So that'll be wave 3 done. So what happens now? The short term, I was looking for a little bit larger 3-wave correction in wave 4, but that didn't happen. Today we've just sold off, and it's an extending kind of 5th wave pattern here. So we've reached what this morning already, 1725. It could push lower. It could push down below this, towards the 1650 level before this 3rd wave completes. It all depends on how this internal pattern kind of plays out. But for now, I think we're more or less done on a 3rd wave, and we'll probably next week look higher in a 4th wave. And this 4th wave should give, well, it should be 3 waves. It should hit about $22, and then we'd fall again in wave 5. Now, the alternate count can still be quite valid here, because this could be an expanded flat wave 4. So it could be wave A up in 4, a new low in wave B of 4, and then a new high again in wave C of 4. Well, given the extent of the bearish sentiment in the market right now, negative prices for oil. Yeah, okay. I've heard that. I've read that on I don't know how many headlines right now. Yes, oil makers are making losses right now. Well, oil producers are making losses. But you ain't going to be selling $1. You ain't going to be selling oil for under $1 or under $0. Okay, so if this negative sentiment is something to go by, this could be a B wave low, and we could be looking for a larger rally in wave C of 4. So that would be alternate wave C4. Let's get some shape on this. And that will complete an expanded flat wave 4, and then we'd head lower into wave 5. I won't discount that at all at the moment, simply because of the overwhelmingly bearish kind of sentiment that's out there. That might produce a larger rally than what I'm expecting in wave 4. Let's say in wave 4 green here. So eyes open for that next week. We could see a larger wave C of 4 to trigger this alternate count. If we push above 25, that will trigger the alternate count officially, because it'll break the wave 1 low. But I think you probably could pull that trigger level down to 2330, that internal B wave there. That's a possibility. Okay, so for next week, we're looking for some sort of corrective rally, either in a wave 4 of 5 or wave C of 4. Now let's move on. Moving on. S&P, same deal. I don't really have to run into this, as I think I've covered it more or less in the Dow. The exact same pattern is underway, although it's a 5-wave run lower in wave A, rather than a 3-wave low, or rather than a 3-wave decline in wave A. Okay, it's a 3-wave rally in wave B, and that's the important note to make. And I'll just fill that in right now. A, B, E, B, C, D, E, F, G. 3-wave rally in wave B, and wave B should give way to a large decline in wave C. So what would we expect in wave C? Well, first of all, we'd expect me to have a label in for it. Okay, let's get a simple trend channel on that. If we clock out that wave B high, more or less where we're standing right now, that suggests a low in wave C down around 1550 levels. Well, we've got 1650. Yeah, so a break of 1700 anyway in a 3-wave decline. before we rally again in a large B wave. So if this wave B is now complete, which I think we are, it's all but done. We're just kind of filling out the final iterations of this C wave. I know we've been doing that for a week, but like I said, it's a dangerous bear or bull trap, this 3-wave rally, and I think it'll take out a lot of people on the way down again. The main, let's say, confirmation point would be a break of 24.30. If we get a break of 24.30, that would be wave B broken, and that would confirm that wave C is underway. But there's a couple of internal shoulders here that we could look at as well. We have a wave 2 low. If this is an ending diagonal, we have a wave 2 low here down around 26.46. If this is a 5-wave pattern, the 26.46 level comes in at wave 4, and then we possibly have an ending diagonal in there for wave 5 anyway. So it's, it's a C wave of a corrective wave B. I don't see it any other way, and most especially if we push lower again today, and we start pushing towards the weekly low at 27.50 level. If we sell lower into the close this evening, that should, that'll wipe out that internal or that spike that happened overnight Thursday or aftermarket Thursday, and that'll be a strong enough indication that wave 1 is underway. But most especially